Welcome to the Retirement Evolved podcast with certified financial fiduciary Adam Bruno.
Welcome back, everyone, to the Retirement Evolved podcast. I'm Lauren, and I'm here with our certified financial fiduciary, Adam Bruno.
Well, hello, world. It's been a heck of a month, hasn't it, Lauren?
Heck of a month.
Cow wars and interest rates staying the same.
Yeah,
and,
oil,
the
gas.
market going down.
It's been crazy, but
Good thing our families didn't have to worry about that.
right? Oh, so true. But our goal this week for this podcast is pretty simple. We want to bring you a variety of perspectives from the biggest names in the financial world so that you can make decisions based on facts, not fear. I send out an email every week to our families called Facts Not Fear. And this is where you can get those updates about what is going on in the Middle East, what is going on with some of our biggest institutional companies.
That's right, Lauren. There's a lot of noise out there right now. Again, you got the war, you got interest rates, you got changes in the administration, and it's easy to get overwhelmed by the headlines. But today, we're going to look under the hood of the economy and see what's actually happening. And I will also say that we are lucky with our families because Kurt and I, and the whole team really, are constantly looking at all of these white noise pieces and trying to figure out, hey, how is this going to affect, well, I can't say anybody's names. How is this going to affect family A, right?
Right,
How's this going to affect family B? So let's go ahead and get into it.
Yeah, we've got a lot of reports today from BlackRock, WisdomTree, Zacks, First Trust, and Riverfront. It's a packed show, so let's dive in. Adam.
Head first, baby.
Let's start with the big headline. BlackRock is reporting that the conflict in the Middle East has effectively closed the Strait of Hormuz. For those of you who don't know, that's a major choke point for the world's energy. And so what does that mean for us here at home?
Well, you know, there's what the news says and then what it actually means. So it's a global macro shock. When a major trade route like that closes, it kind of ripples through everything. So BlackRock expects this to lead to a higher inflation and higher bond yield environment. Interestingly, they think that if this drags on, the economic pain might actually force the conflict to end sooner because the fallout becomes too much for the countries involved to handle. So that is interesting, right? It's like we're all cutting each other's purse strings and dropping money all over the place.
Right. It sounds kind of like a double-edged sword. Now, WisdomTree, I know, also weighed in on this, but they're focusing on something every one of our listeners sees every single day: gasoline prices.
Oh, here we go. So, exactly. WisdomTree points out that while investors talk about crude oil, the average person cares about the price at the pump. When gasoline prices jump, it hits people's psychology immediately. And you know, Lauren, it makes them feel like the economy is in trouble, even if it's not. They mentioned we might see a 10% correction, which is just a fancy way of saying a temporary dip in the stock market because the mood has become more cautious. And we all know that the stock market is driven by emotion.
Yes, and supply and demand, of course.
Mm-hmm.
But they aren't predicting a total crash of the market, correct?
No, they're anticipating a major decline for the S&P 500, just some short-term nerves because of those gas prices.
So they aren't anticipating a major decline. That's good. Okay.
Oh, I'm sorry. Yes. Lauren, I'm sorry. It's Friday here where we are.
I know.
Yeah, I'm sorry. They aren't. That would have been pretty terrible if it was the other way.
Let's move from the Middle East for a second into the job market. Zacks Investment Management looked at the January employment report, and on the surface, it looked okay, 130,000 new jobs. But you told me earlier that there was a rewrite involved?
Right. This is why we look at the facts. Zacks pointed out that the government basically did a significant rewrite of the last 2 years of data. I do that with IRA too, right? I always rush it and stuff. It changed how economists understand the labor market. While the numbers are still solid, it's a reminder that the job market is shifting, and we have to keep a close eye on it.
Right, and that is one of the coincident indicators that happens in the market. So on the brighter side, First Trust had some pretty encouraging news about American. What is going on today?
I don't know.
American manufacturing. Adam, do you want to tell everybody about First Trust and how we know First Trust?
Yeah. So that was a great update. Industrial production, basically the stuff we make here in America, rose for the fourth month in a row in February. So it hit a new post-COVID high.
And this is happening despite all the talk about new trade policies and tariffs?
Exactly. So even with the, I guess I'm using quotes here, tariff uncertainty, production is up to 2.5%, and manufacturing is up 2.6% since the Trump administration took office in January of 2025. First Trust, though, says it's not time to throw a party yet, but a new upward trend is definitely, starting to show up.
Yeah. We meet with First Trust quite a bit, I would say, right? And we talk with them about market updates and things like that.
That's right. Out of all of them, I think they do the best job trying to educate private offices. And, of course, they want you to use First Trust products. The difference is with the First Trust investments that we use, there's such a passion behind it and such a great team behind it. So it becomes very, very personal to them. And it doesn't feel as personal to a lot of the other fund managers or managers out there. They spend a lot of time going out of their way to make sure we have everything we need, make sure we have access to their experts. That's what I really like about them. They kind of walk the walk, not just talk the talk.
Yeah, for sure. And we've talked about war, we've talked about like gas prices, jobs, but Riverfront Investment Group says we might be focusing on the wrong things here. Adam, they say like corporate earnings right now are actually more important than geopolitics.
Sure. And I love their analogy. They say that once a quarter, it's time to step into the doctor's office and give the stock market a checkup. That's a pretty neat analogy. They look at the fourth quarter of 2025 and found that U.S. large cap stocks, the big companies most people own, are peerless, meaning they're doing better than almost anything else in the world.
So even with war in Iran making headlines, the companies themselves are still healthy.
Well, that's the key. While the world focuses on the war, the actual trends and how much money these companies are making is what really drives the stock prices in the long run. So Riverfront is using these health reports to plan for different scenarios for the rest of the year.
And BlackRock would agree probably with that U.S. first mentality, right?
They do. BlackRock explicitly stated they prefer U.S. stocks right now because they see the classic ways people diversify, like certain types of bonds, as being challenged by high inflation.
All right. So to sum this up, and we're going to keep going here, but we just said a lot of words, right? And we just said a lot of words, a lot of companies, a lot of things that people might not, know about.
I think we can sum it up by saying everything that we just shared is also available to our families that we serve, and it's sent out by you weekly. So all of these, the best way to look at this is we just gave you a really quick hit with what all the biggest managers in the world are saying right now and what they're thinking. And a lot of our families just want the highlights, right? ESPN, give me the highlight reel. But
Sure.
The reality is the full reports are available to all of our families who want to look at it. What I think is really great is BlackRock has, and they've got their share of time in the media, right?
Yeah.
Nobody can argue with their technology, though. They have an algorithm that they wrote even before AI. This was happening. They know instantaneously what was discussed at a board meeting. So they have technology that shows them what companies were actually saying, what the results were. I would argue to say they know it, if not the fastest, but a lot faster than everybody else. So I think what we need to take advantage of here is that we are constantly in collaboration and getting real world updates rather than just us saying, hey, I read in the newspaper the other day. No, we're hearing it from the sources. And I guess you could say it's not like a newspaper source or a news source. It's actual real world, in the weeds, boots on the ground sources, which I kind of like.
Right. And that's what we're trying to break down, I think, a little bit here today. So, if you're sitting at home and you're nervous about the news, what's one thing people could take away from all these reports?
Denzel said it best. I love me some Denzel quotes. He always has really good ones. One of my favorite ones is you can't attach a U-Haul to a hearse. You don't see a U-Haul attached to a hearse. That's one of my favorite ones. Yeah. But he does say something that's always been real profound to me, and I've heard it a few times now. If you don't read the news, you're not informed. If you read the news, you're misinformed. So if you really think about that statement, it's absolutely true. So aside from saying, what do we take away from these reports? I think we're taking away real data rather than interpreted emotional data that the news turns everything into.
Right.
I think that's the best way to put it. And I think I give you an example of this 2 years ago. Is it 2 years now? I was in the UK. I was in London.
Yeah, I think it was 2 years.
And you know what I really enjoyed about London? First of all the people, it was pretty incredible. You could just feel like you blend right in. I know that's different for some people, but for me, with my severe ADD, I love it that I can just blend into a crowd, right? But when I would listen to the news there, it was just a staunch British guy discussing the political parliament and what was discussed today. Like they just give you the news. They don't necessarily have to go on there and get all emotional and give you the news is an entertainment value in the rest of the world.
Right.
In the US, it's like entertainment value. In some really tough countries, it's propaganda. But it felt like in Europe, in most places, it was just the news. This is what's happening. This is what's being reported.
Yep,
And
I
no
felt
opinions.
that way too when I was over there.
Yeah.
It was during Hurricane Ian.
Yeah.
And it was the same thing. I was just getting, more factual, I guess you can say, news than all the bells and whistles that people put on for us here. I always think to myself, I try not to watch the news a lot of the time. Put your sunglasses on and, some blinders on and maybe turn the news off. I always watch my Wheel of Fortune and my Jeopardy afterwards.
And then you go to bed.
And then I go to bed. But I think it's such a depressing thing to watch sometimes. I mean, yeah, you're getting, I guess, updates about what's going on locally, but it can be such a downer.
Can we take that one step further? It's not just that it's depressing. It's becoming what's the right word to look at it? It's becoming almost unprofessional and morally. I mean, it's unprofessional because we're not getting real news. So the responsibility aspect, the ball has just been dropped. So yeah, it's depressing, but from a moral standpoint, a responsibility to journalism, it's gotten. I don't know how you can be a journalist in today's world, in the United States at least. And I'm not bashing the United States. I'm just simply saying that we talk to other countries about propaganda and spreading the wrong messages. I mean, how are we any better right now with the news sources that we have? It's really become just an entertainment value instead of, and you could say entertainment is propaganda, right?
Sure.
I mean, I'm probably going to get arrested by the Men in Black are going to show up after this podcast, but that would assume that we had the Men in Black listening to this podcast.
Right,
but
right.
The reality is you get what I'm saying. So it's nice to actually, the BlackRock, Riverfront, First Trust, it all feels like it's actual data. It feels like that old British guy just giving us the news, right? That's what it feels like.
Yes, and I think the key takeaway was don't let the psychology of the gas pump and the prices at the gas pump distract you from the facts of reports like this.
And it's not even just about the reports. It's about the fact that even when people report like Fox Business and things like that, it's even turned into this emotional ride with the stock market. It isn't based on facts a lot of the time. It's based on facts that are selected and pulled out. What I really like about First Trust, Wisdom Tree, Straight Street, BlackRock, they all give you the legitimate sources. So they're not pulling any facts that they want to
right. So
they want to improve their position on. Or
well
said.
Like that. Facts, not
fear. That's right.
Facts, not fear. I do want to give you guys some updates about what's going on here at Evolution. We do have a singles event going on next week on March 25th. I am sold out for that one. It has become so popular. I'm actually, if that's something you might be interested in, shoot me an email, Lauren, Lauren, at evoretire.com. I'm thinking of doing these probably quarterly.
I think it's a great idea. And also, if you want to give us some feedback, obviously a singles event is awesome. But, we're open to any really kind of theme. We want to have, I'm getting so tired of speaking at dinner events. It's just going to be really nice and refreshing. And Lauren and I were talking about this the other day. why don't we let the people decide, right?
Let the
people
people
decide what
decide.
kind of event they'd like to see. And Lauren did mention it's sold out. We actually don't charge for it. I think,
Right. I should have said that. It's free.
No, I think sold out's the right word, right? Because that makes you think of a big venue.
It was, an overwhelming response.
What do you got, like 80 people coming or something?
Yeah, it was an overwhelming response. And I didn't realize that it was such a needed thing, right? And you tell people all the time, like, oh, you guys mingle, get married.
Get
here we
married.
go.
Yeah, marry your best friend.
But, it's important to have, the tidbits of wisdom in retirement. And this workshop will focus on a single filer. So I think that's important. So
filing single on tax return.
Yeah. We do have educational workshops as well. If you'd like to attend, those are during the day. They start at 11 o'clock. Yes. And they're in more educational atmospheres, like, for instance, Florida Southwestern College, right here off of College Parkway in Fort Myers.
I feel like a big shot when we get to teach in those classrooms.
I know, you love that.
So technologically advanced.
Yep. And then Alliance for the Arts, that's another venue that we use that it's a classroom style event. It's a little more personal. These are not huge. I don't get as many attendees for these, but when I say that, it's actually the best because you really get to talk about what's going on
with you. That's
it's
the
personal.
key.
It's great.
That's what I really like too. And the other thing is, we know that you guys see things on the news and you see all these shows and you get the invitations in the mail, but it doesn't always feel like it's a personal experience for your specific scenario. So we try not to use generalizations as much. I try to use what we're seeing as people are coming in. And Lauren, what do you think we're seeing, the biggest emphasis on now when we see families coming in? I think it's kind of shifted from taxes a little bit to this idea of, hey, we know there's a lot of things going on, and we just want to make sure we have the right team behind us.
Absolutely. I think a lot of people are looking for that team approach. You're the CEO. When you come in here, you're the CEO, but you've got a team. You got your CFO, your COO. That's the team. That's what you need in retirement, I think.
And I think the emphasis is so much on investments over the last even 10 years.
And that's the easiest part of your job.
Exactly, because the investments, the market's been great,
Right.
Where we're really seeing the reward is when the market goes down like this.
Right,
and our
and you
families
have that
didn't
safety
have,
in place.
they didn't have anything to worry about.
Yes.
There's little bits of losses here and there, but it's not like a big drastic loss compared to what you see in the market.
Yeah, I still think tax planning is one of the key reasons people come in, and also Roth conversions. That goes along with advanced tax strategies.
Yeah. People just want to know their numbers.
They
want to
know.
Roth conversions.
They want to know: is this the right thing for me to do? Is this good for my situation? All good things, right? And this is a place you can come and really get that information.
And you did say something cool at the other event. I think it was 2 nights ago. You mentioned that really what it comes down to is people have graduated they've graduated from that point in their lives where they just need investment returns and just investments. And now we've come to this point where, okay, what do we do? And that's so hard for successful families to ask because they've been so used to doing it the same way. And a lot of families feel, well, I've got, $1 million, $2 million, $10 million. I don't really have much to worry about. And then they start to find out about the tax leakage, like all of a sudden they're paying more for taxes, right? We talk about it all the time on the podcast, but the reality is for whatever reason over the last year and a half, I think it's really started to hit home with a lot of the families. And so the people on the news and the people on the radio, it doesn't make much sense to listen to just things about investments when we're getting a bill for our Medicare. We open it up and it's $300 more than it should be, right?
And I just have to touch on that for a second. With the Medicare surcharges, with the estate planning, those two things we go over. And like the One Big Beautiful Bill kind of helped us out with the estate planning aspect where they increased it to 15 million.
Preach,
for
girlfriend,
single,
preach.
30 million for married couples. But every dollar over that, and you can hear 15 million and you're like, oh, I'll never get there.
Right.
It is easier than you think, people. In retirement, it is easier than
Very
you think.
easy.
It is your entire estate.
Especially for the boomer generation.
Right.
I mean, these people are leaving $60 trillion in wealth
to the millennials.
To the millennials over the next 20 years.
And the same thing goes for Medicare. You've got thresholds for single of $109,218 if you're married. Sell a stock, sell a property, do a Roth conversion, your RMD comes out. These are all reasons you can get over that threshold, and you're charged more because you've done so well. It's just
40 cents on the
absolutely
dollar.
crazy. These Medicare surcharges, you know, the less money, and I don't know if I'm going to get in trouble for this, the less money you can give to the IRS, the better.
The better.
You know,
They didn't earn it.
To the government, whatever it is, you've worked so hard for your retirement. It is just a shame to be giving any more away than you need to. You need to protect and keep that money, and that's what we'll help you do here at Evolution.
I
will get off my soapbox.
Couldn't have said it any better myself. You're absolutely 100% correct. And you have become somewhat of an expert on the big, beautiful bill. And I don't even think, so what you're talking about, the estate plan allowances, now imagine $60 trillion, right? If the government can get their hands on 40% of even a quarter of that, what are they going to do with the money?
What are they going to do?
Yeah. So it's kind of like that. Why don't you, since you're on the topic, why don't you talk a little bit about, the debt that we're adding on with the big, beautiful bill?
Sure. So right now we're at 39 trillion as a country in debt.
Mm-hmm.
The one big beautiful bill is going to add $3.4 trillion to that. And we don't know what's going to happen with Medicare. Social Security is going to become insolvent in 2034, supposedly. We don't know the effects of what this bill is going to do to those big deals, Medicare, Social Security, taxes. But adding $3.4 trillion to our debt, I mean, just tack it on. We're going to be at 45 before you know it. And this does not include the deficit that we have as a country. And who's paying for the deficit? We are.
Yeah.
That's our money.
Yep.
So it's
actually, they're spending so much of our money that they have a deficit.
That's
right?
our money. I mean, that's, what is it, Adam? 3 to 5 trillion a year?
Yeah. I think it's like, I think it was over 4 last year.
I mean, it's just absolutely corrupt.
Corrupt is a good word. You know, I don't want to, rattle any. Well, I don't care if I don't want to. Let's rattle the cages.
I don't want to rattle the cages, but I think
people don't listen to this. No matter how many times we say it, it's like, guys, you got to get in control of this. And we keep saying it. We did the same thing when we were talking about interest rates, when we talked about bonds for so long, right?
Yep.
Everybody was real happy with bonds, and we never wanted to use them because we knew that we're in that interest rate environment where it's got to go up.
Yep.
And then all of a sudden, oh, you know what? We should have listened. It cost us, millions of dollars or hundreds of thousands of dollars. So that's the reality. I'm giving you a general observation, right? I'm not saying we actually saw people that specifically lost $1 million.
Right.
But when you think of it as a whole, it was very easy to lose money. And all we had to do was avoid bonds.
Yep.
Now we're saying that taxes are going to go up eventually. It's just not financially feasible for taxes to remain as low as they are. The estate planning allowance that you talked about so well, 15 to 30 million. In 2026, it was supposed to go back to 6 and 12 million.
Can you imagine?
Everybody's close to that
not
by the time they die.
Not everybody, but it is so easy to get there.
Yeah.
Things happen. People, as somebody who sees retirees every day, you don't even realize how far your money can extend.
That's right. So you're a retiree and you leave, let's say you're over that 12 million. Remember, the estate is everything. It's not just the investment. Some people only say the investments. Oh, I only have 3 million. I'm fine. But the reality is, think about leaving $1 million check to your kids and the government comes in and says, actually, we're going to take 400,000 of that, almost half, right? We're going to take 400,000 of that, and you can have 600,000.
And you can't say over my dead body.
And you can't. That's a good one.
Or maybe you can.
That's right. That's right.
But
that's the reality of what they would like to see happen. They would like to see that.
Yes.
Exactly. We talk all the time about a flat tax rate. Man, wouldn't that be great? 15% across the board for everybody.
I think a lot of people would be okay with that.
It's common sense, but we don't do anything based on common sense. Listen, I'm not bashing the United States. That's not what I'm doing. I'm talking about very specific problems that we see that don't seem to be addressed with any frickin' common sense, right? I mean, that's just, didn't Benjamin Franklin wrote a book called Common Sense,
yeah.
CENTS, right? Yeah. So anyway, that we'll get off our soapbox.
Yeah, it's been great. I hope that everyone listening to this feels a little bit more, at ease with what's going on right now. Don't make these emotional decisions. Even though the market is emotional, do not make an emotional decision based on that. Because
Well, sometimes it isn't about even being at ease, Lauren. Sometimes it's like, oh, they were thinking about it anyway. And it's like, finally, somebody's actually talking about it, right?
Right.
If you want to have a conversation about it, call us. We're happy to have a conversation.
Yeah,
email us.
absolutely.
Listen, and when I say that, and I hope that you all hear my heart when I say this, you don't have to be a client. We're not trying to sell you anything. If we find like-minded people that we feel we can bring value to, that's great. But even if we don't, if we can help one person, just one person every day have a better retirement, that's an amazing feeling for me now. Everybody can have money. You can make millions of dollars. But the reality is, what's our purpose? And I strongly, strongly feel that the foundation of this company was built on service and helping people. The money always comes after that.
The evolution of the industry.
The evolution of the industry. The evolution
Putting
of retirement.
trust back in wealth management.
Yep. Keeping I can't say that on the air. I was going to say fiduciary. If you rearrange that word a little bit, keeping that out of fiduciary, right?
Right.
Okay.
It's so true. It's so true. Well, thank you guys so
Thank
much
you
for
so
joining
much.
us.
Yes.
We love doing these podcasts. Adam and I sometimes, we go off on a tangent, but this is what we love.
This is what we do. This is who we are. And I got to tell you, Lauren, I feel like after today, I don't really have to do the podcast anymore. Holy cow, did you rip through it today? I mean, I couldn't be more proud of you. You are an integral part of this team. And if we don't say it enough, we love you. And I'm sure everybody prefers listening to you rather than me. You have a much nicer voice. But in that event, we're going to get out of here, people. We will catch you on the flip side. And remember to continue to evolve and continue to get 1% better every day, even if it's 1% better a week. Just be better, do good, go Bills. Have a great week, everybody.
All right. Bye-bye. Investment advisory services are offered through Evolution Wealth Management, Inc., an investment advisor registered with the United States Securities and Exchange Commission, CRD number 307644. Registration does not imply any level of skill or training. You can obtain a copy of Evolution Wealth Management's firm brochure, Form ADV Part 2A, and Client Relationship Summary, Form ADV Part 3, free of charge by visiting https://advisorinfo.sec.gov/firm/summary/307644. Evolution Wealth Management offers investment advisory services only where it is appropriately registered or exempt from registration, and only after clients have entered into an investment advisory agreement confirming the terms of engagement and have been provided a copy of the firm's ADV Part 2A.